Hello, good day. My name is Ziad Aldaberg and I am Forex Optimum Broker Financial Analyst. I would like to bring you all this week review on what's going on in the financial market and how you should stay informed from day-to-day updates and also the news. Having a look at last week, which was actually very hard for American economy and also American currency. The US dollar index dropped to several months low and the weakness of the greenback is mostly reflected if compared to the euro. We expect that investors will continue to sell dollar this week. And this sell-off would be caused by the same existing reasons. This week, the US economy stimulus package will unemployment benefits to those who lost their jobs in the pandemic will cease to exist. However, the US Congress is working towards a new fourth stimulus package worth $1 trillion that may include benefits for companies that will urge employees to resume working. However, despite huge amount of stimulus packages, US economy suffers and social distancing policy was also applied in the United States since the end of first quarter and the nation's GDP fell by 5% for the first 3 months of this year. Most of the states were in strict quarantine in the most part of the second quarter and economists forecast the GDP will plummet about 35% later this week. This week, we also have got Federal Reserve meeting that is expected to continue dovish monetary policy in the present situation. And having a look at last month, Fed official noted that the ultra low interest rates to remain over 2022 as well. Technical picture suggests that the US dollar index may continue to decline further to 92.2, 93 points. Having a look at US stock market, which may be more or less stable, looking for the data on the US economy to be published this week. If the GDP data will turn beyond all worst expectations made by the economists, then the drop of S&P 500 index may also accelerate. The 2965.66 benchmark will be critical for the broad market index. A break to this level will indicate a dismantling of March midterm upward trend. However, this scenario may be considered as an approach to see that what could be coming next. So we may expect within the existing trend another rebound of the index to 3328.45 mark could be possible. And having a look at gold will continue to attract investors in the current turbulent market conditions despite the recent spikes of its prices above all-time highs at $1,920 per troy ounce. This rise may resume after a short local correction, but the upward heat in gold is not over yet, and we may expect gold continue to rise towards the target of $2,000 per troy ounce. The situation on the US debt market hasn't changed a lot this week. The yield for the benchmark 10-year US Treasuries is still way below 0.59%. Such low of yield are actually inspired by the Federal Reserve loose monetary policy and may decline further in the case of disappointing US GDP data. Weak global growth perspectives, precious oil prices and US Sino tensions are adding to this pressure as well as the new pandemic spread worldwide. China has also ordered to close US consulate in Chengdu in a mirror response to the US demand to close Chinese consulate in Houston. Considering the intense negative background, crude prices may remain under pressure as well. And having a look at the technical picture, which actually suggests that Brent crude will continue to consolidate in the area of $42 to $42 per barrel. And that's all for the day. We will be coming back again to bring you more updates later on. Till then, have a good trading week and wish you all best of luck.